Viewer is asking this question right here. We haven't bought oil or gas from Iran in 25 years. Why would the war affect gas prices in the United States? The U.S. Energy Information Administration tracks oil imports. Since 1992, the U.S. has imported 174,000 barrels of oil from Iran. It may sound like a big number, but we imported 8 times that amount in 1 month in 1977. It doesn't mean the Iran oil spigot is shut off to the world.
Other countries buy oil from Iran, and there's only a certain amount of oil produced on a daily basis.
Data analytics company Kepler tells us China buys all of Iran's oil and 80% of its fuel oil and liquefied petroleum gas. In the first 6 months of this year, Kepler says China bought an average of nearly 1.4 million barrels per day of Iranian oil. Outside of the potential for increased Chinese demand for oil, investors also worried that Iran would close the Strait of Hormuz. The International Energy Agency reports roughly a quarter of the world's oil supply travels through that area. So they say closing the strait would have a major impact on global oil and gas markets. But Matt McLean of GasBuddy never seriously worried about that scenario.
It's all designed to inflict anxiety and fear because it doesn't make economic sense for them in any way, shape, or form. It would be detrimental to their country on so many levels that it's not really something that makes a whole lot of logical sense.
Oh, coming back to the viewer's question, why would the war affect gas prices in the United States? Well, you've heard the answer in select words in this story. Worry that China would squeeze the world's oil supply, fear and anxiety that a prolonged war would disrupt the Strait of Hormuz. Bottom line, fear, worry, and anxiety about the impact of a war do play a role in prices. If you have a question for Fact Finders, all you have to do is go to ky3.com and you can submit your question.